Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be looking at the bigger picture view of the 60-day cycle by revisiting the bear market low of 2019 and how we came out of that to give us a bigger picture view of how these cycles can work in our favor. I'll also run down on the larger time frames and see exactly what the larger time frames are telling us for the direction of the Bitcoin price. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions. So with that out of the way, I'm going to revisit 2019 and have a look at exactly what happened to the 60-day cycles back then. So we're on the daily chart here. This was the actual bottom, which was on the 15th of December 2018. And if you take a look at the bottom from there to the next bottom, the cycle actually ended here on day 53. So always remember, these 60-day cycles are very flexible. The creator always gave a rough guide of around 10 days either side, i.e. between 50 and 70 days. Now that doesn't mean that those rules don't have any exceptions, and as we always know with rules, they always have exceptions to those rules, and we shouldn't get caught out with being rigid that if it's got to be between 50 and 70 days then that's what it's got to be. We're dealing with Bitcoin, and when you're dealing with Bitcoin, there are going to be absolutely unexpected moves. So as you can see here, with the Bitcoin bottoming out in 2018-19, we had a 53-day cycle over here, which was then followed by a 47-day cycle. So we got a 47-day bottom here, and that obviously was an exception in this bear market, because the bear market is right at the bottom of the trend. And so what you're going to get is people accumulating, people behaving unexpectedly to the normal market conditions. So these cycles will be sometimes out of the normal ranges, and we've got to be always prepared. And then that 47-day cycle was followed by, would you believe, a 31-day cycle here. So here we got two exceptions to the rule, and that's fine by us. And if we keep an emotional intelligence about this and not get disheartened that these should be within the realm of the 50 to 70 days, then you're going to get punished when these types of things happen. And the beauty about these 60-day cycles is that when these exceptions to the norm happen, what they're doing is they're alerting you to something very different that's going to happen very shortly. And this is exactly what happened here. This cycle low at 31 days should have been an alert, a warning sign that this is about to happen here. And this is where these cycles really come in their own, because when they don't follow the actual rules of the cycles, we know that there's something different is going to happen, something unexpected. Bitcoin's getting prepared to do something it doesn't normally do. So a short cycle here was saying that there are a lot of desperate buyers who are not willing to let the price come down into the cycle low to these levels down here. So always be prepared that when you're at a bottom low here, these are extreme conditions down here where people who may have missed out on buying at these low levels, what they do is when they see that the markets are going higher and higher, they become desperate at these levels here because they've missed out at these levels down here. And the same things occur over and over again. So if we bring ourselves back to the current cycle, so far we've had a 51-day cycle at the bottom low here, which is very similar to the 53-day cycle we had at the bottom of the 2018-19 bear market. But this was followed by a 70-day cycle over here. And currently, the bottom we made is on day 45. Now, this is not confirmed yet, but we have to be open, fluid and flexible that this could be the case, but we haven't taken that low out yet. So we could still go into the 60-day cycle over here all the way down to the 25.2 level. So we just have to wait how these candlesticks actually develop. And as I said in the last video, we had this long-legged doji candle over here, and while the next candle here took out the bottoms of these candles here at 29,200, I said quite clearly that in order to get confirmation, you need to get above this long-legged doji candle here. And if you put a marker at the top of that and at the bottom of that, so as we can see, we are still well within the range of that long-legged doji candle here. And there's no resolution yet. So until we get either above or below, if we get above, then that confirms that the 45-day cycle is in. And then we can start looking for trades going into the next cycle. And if we break this 45-day cycle low here, then we're more than likely, with a higher degree of probability, going to go down to this 25.2. And remember, this is nothing to do with certainties or guarantees. These are all to do with probabilities. And once we can get that in our heads, then we will never get caught out with the emotion that these candlestick patterns and the price action that takes place over here can actually do to you. A lot of people get very disappointed when it's gone down when it should have gone up, or gone up when it should have gone down. We mustn't get into that emotional game, and just use these frameworks, these indicators, these cycles to get the general direction of travel, and always remain calm when things don't go according to what we may think or should actually happen. So currently we're really waiting for a resolution of this price action here to either go above the long-legged doji candle here, above the 30,022, or at the bottom of this candle at 27,242. So this is what we're waiting for, a daily close above or below, and that should give you the general direction of travel of where this cycle is going. And I want to bring everybody back to this quotation I've given a few times in the past. This doesn't just apply to Bitcoin, but in general to life itself. And that is that patience is not the ability to wait, but the ability to keep a good attitude while waiting. So please don't get despondent when things don't happen the way you want it to. Just remain calm and collected, and just wait in a neutral, fluid and flexible way of where the actual direction of travel is going for Bitcoin, and then act accordingly in a clinical and calculating way. Certainly when we topped out over here, it looked like that there was one more move into this high resistance point around the $32,000 mark. And when this didn't materialize and we started to go lower, that looked like, with a higher degree of probability, that we're going to move gradually into this 60-day cycle low here. But as we know, we should always let the price action and the candlestick patterns dictate where we think the market for price for the Bitcoin should go. And this candle here, indecision candle, was the first sign that we may actually get a return back towards a higher end over here. And as I also mentioned, this green line, I've been mentioning it for a while now, that this could be where we find support, which is exactly what we did. But as we can see here, we came back again back to this green line. So it may well be that we're now going to bounce off here, and that will confirm, once we get above this 30,000, that will confirm the 45-day low here. So this is what we're really waiting for, some confirmation. We bounced off the green line one more time, as we have done in the past over here many times, but we must remain patient to see exactly how this will develop. Certainly the 45 days seems too early to be a cycle low, but as we've seen in 2018 and 19, we've had cycles which are much lower than that. So everything is on the table. We can expect exceptions to the rule in these cycles, but certainly here, if we can go below this candle, this 45-day cycle low candle at 26,900, then we should see a slow decline into the 60-day cycle in this window around here. And I did mention that once we got over here and started to go down, that we should expect counter trend rallies into the actual cycle low. And if we have a look at the EMA, this is where we normally get the counter trend rallies, usually up to this point here. However, the long-legged doji broke above it, and then it was confirmed by the next green candle. But since then, as you can see, we've now come back and gone below the 8 EMA. And that's telling us that this was, with a high degree of probability, a counter trend rally. But this green line is also telling us that we could easily bounce off there. So we do have to be patient and let the price dictate our understanding of these cycles here. And one of the ways to use these cycles is to let the cycles give us information. So this way here, if let's say this 45-day cycle low is where we are, if this is the actual cycle low, that gives you information that there's a lot of desperate buyers around here. They're not willing to let the price go down to much lower levels, which again tells us, just like in 2018-19, that if there are a lot of desperate buyers over here, this price may be signaling a big move to the upside coming up. So these are little clues that we can deduce from the market price as it's weaving its way through the 60-day cycle framework. And this cycle framework is another reason why I have to keep repeating myself that please don't try to time these tops and the bottoms. You'll get caught out, especially on your long-term portfolio. You should ride those no matter where they go. It doesn't really matter because the general trend is to the upside. And you really don't want to lose your long-term positions. And if you want to play these ranges, then just do it on a small part of your portfolio, which is what we do with the Bitcoin miners. We do some swing trades to try and see within the framework of the 60-day cycle. So currently, I'm waiting for some signal on here to say that we've now bottomed out, either here or a little bit later on. So that's where the patience comes in, and then we'll have the next round of the next swing trades over here once we realize that the bottom is in and the potential for swing trades will start being more on our side. Again, it's all about probabilities. You have more chances of swing trades at these low levels of the end of the 60-day cycle lows over here going into the midpoint than you have after the midpoint over here, because here you're expecting the market to be coming down. So you've got to time the swing trades according to these cycles, and they've paid off very handsomely for me anyway in the past. And certainly once we get into the next cycle, I would be looking to take some of my long-term positions, because this is where I've said in the past that we've got one, maybe two cycles where we will be going towards the $40,000 and $50,000 mark. And that was based on the historical measurements that I did for the cycles. For example, back in 2015, down here, having topped out at the end of 2013, we had this bear market, got to the bottom, and then we had a 50% rally from the bottom over here to the top over here. And in 2018, in the second cycle, once we'd bottomed out, and you can see that when the price came down, it was down at the 61% mark, found it resistance here, and along here as well as over here. So this 61.8 is a good marker to actually aim up to, from 50% to 61%. So coming to the current cycle from 69,000 down to the bottom at 15,400, we can see quite clearly we haven't met the 50% Fibonacci retracement yet. And that level would be around about the 32,000 mark, which was our target in the last 60-day cycle top. But it didn't materialize. But we know that it can go anywhere between 50% and 78.6% here. And the midpoint of that is this 61.8, which is around about the $40,000 mark here. So this is why in the many of the videos I've said that before we get to the halving, which is April 2024, we should get up to anywhere between $40,000 and $50,000 mark. I think in one of my videos, somebody made a comment that, oh, you said 3 weeks ago that we're going to hit the $50,000 mark. I think people want to hear whatever they want to hear. They're not really listening to what I'm saying. For all the videos I've said in the last many months now since we bottomed out here, is that we can expect between 40,000 and 50,000 between now and the halving, which is in April 2024. So get that clear so that there's no confusion. So this is where I'm really expecting before the next halving. It can happen in the next cycle or the next cycle after that. We don't know. Nobody knows what's going to happen tomorrow, never mind in the next few weeks and months. But what we can do is ascertain from previous cycles what could possibly happen in this cycle. And this is the actual window over here where we can actually aim for at least the 50% mark. So anywhere between 50% and 78% mark, this is the window where we will be able to top out and take some positions. And as I said, on the long-term portfolio, I have some strategic points where I will take some positions off the table. And this is one of them here. So having got in at these levels down here in the Bitcoin miners, I'm now going to be taking some of those positions out somewhere in this window over here. And I'll let everybody know when that happens, because we'll just have to wait until the price action develops, as well as the candle patterns. They're very, very important. Example, if we get a gravestone doji candle like this on a weekly chart at 40,000 over here at these levels, well, that's telling you that the market has now topped out. So this would be a great point to actually signal a big downturn and that we may well have topped out at the 50% Fibonacci retracement. So that's why these candlestick patterns and the price action is very, very important. And we must wait for them, have the patience to wait for these things to develop before we actually dive in and make big decisions. And talking about swing trades and long-term positions, so moving on to the Bitcoin miners, I use these 60-day cycles to highlight the swing trades that I'm looking at. And in this current cycle, I stopped doing the swing trades at this point here when I mentioned it in my Bitcoin Miners Club, that all the swing trades we did from this point up to the midpoint here were the ones that gave us the higher probability of being successful, and we didn't get stopped out on any of them. But here, if you do swing trades on this side of the cycle, you're more than likely going to get stopped out. So that's ended up being a very good call over here. So currently we're waiting for the signals for the bottoming out of the 60-day cycle before we get into the next round of the swing trades. I know that some of the Bitcoin Miners Club members may have taken out the shorts, i.e. they've sold over here with a view to buy back down here, and they may well be in a very big profitable position, but I don't do shorts, especially in a rising bull market trend. And that's just my trading style. If it suits your style to do shorts in a bull market trend, then and you feel comfortable with that, then carry on doing what's most comfortable to you. So now we're waiting for a signal to confirm the 60-day cycle for the Bitcoin, which will trigger some of these swing trades that I'm looking at for the next 60-day cycle high. I will be identifying these swing trades in my next Miners Club video, which will be tomorrow, as well as doing the usual technical analysis. And there's also a special section tomorrow covering the signal which actually marked the exact bottom of one of the Bitcoin miners. And this was in December when it bottomed out at a certain price. Now, the reason why that's very important is that we can then use that signal as a marker for the next bear market low in 2 to 3 years' time. And some of these markers are good signs and signals, so you can roughly time the bottoms of these Bitcoin miners going forward. And these types of signals are very rare, but for those who take note, they will prove extremely profitable in the future. And if this is the type of thing that you are interested in, or you just want to actually support the channel, then join the Bitcoin Miners Club. It's a rapidly growing community of like-minded people. All you have to do is actually click the join button at the bottom of all my videos. There's a join button here, and also in the description box here, there's another join button for those of you with a handheld device, because in the handheld device, this join button may not appear. So you can use this one in the description box instead. And once you do that, it will give you instant access to all the videos I have done over the last 2 months, with special features on 6 of the highest potential Bitcoin miners for the next 2 to 3 years, which are already proving to be extremely successful, because since we covered them, some of them are up by 200 and 300%. And you'll also see some of the previous swing trades that we did in the last cycle. The cost of joining is only $4.99, and you can actually cancel at any time, hassle-free, as there's no obligation whatsoever. Okay, a quick rundown on the actual time frames. On the 3-month chart, I showed you this pattern here, the Hikake pattern, with a red Marubozu mother candle on this side here, followed by an inside bar candle. The top and the bottom is contained within the top and bottom of the mother candle. And the third candle is followed with a lower high and a lower low, which gives the impression that the price is going to go lower. And this is where everybody gets caught out with this Hikake pattern. Instead of doing that, we have a green candle that comes to the upside. And if that closes above the inside bar candle, which it did, that confirms that this pattern, which is a 4 to 6 candle pattern, on the 4th candle here, or maybe the 5th or the 6th one, as long as it goes above the inside bar candle, then this candle pattern is going to be playing out with a high degree of probability. So on this occasion, the 4th candle went above the inside bar candle, so we can expect it to play out with a few more 3-month candles over here. And this is really telling us that we could quite easily reach this $40,000, $50,000 mark in the next cycle, or even the cycle after that, on the 60-day cycle framework that we've got here. So everything looking good. We're finding support on the 8 EMA as it's weaving through with this current candle, which closes at the end of June. So we'll just have to keep monitoring this. But as long as we don't close below this, which is at 27,200 for the next couple of months, we should be good to go further. And on the monthly chart, as I've showed you this before, which was really telling us the end of the bear market over here, I used this chart as one of the main indicators to tell us that once we get above the 8 EMA, that is usually a signal that we've come to the end of the bear market, and we're now entering the new bull market for the next three years over here. And that's based on the historical perspective. When we topped out here in 2017, the bear market here was ended by the actual moving of this monthly candle above the 8 EMA that signaled the move to the next bull market. And similarly, at the end of 2013, the top was followed by a bear market here, and once we recaptured the 8 EMA, that was the signal to go to the top of the next bull market. And in the mini bear market, exactly the same thing happened here. Once we got above the 8 EMA, that was a signal to go to the next rally top over here. So we can see quite clearly that we're still above the 8 EMA, and on the monthly time frame we're good to go to much further higher levels over here. And on the weekly time frame, exactly the same, still very bullish. We captured the actual 8 EMA on this candle here, and since then we've bounced here, here, and currently we're actually finding support exactly on the 8 EMA at 27,600. So as long as we don't break the 27,600 and close below it, we can of course wick down and then recapture it again. That's obviously possible. It's a weekly candle, so it doesn't matter whether we have daily closes below this. As long as we get back above the weekly candle, above the 8 EMA at 27.6, we should be good to go much higher. So quite clearly on the weekly, the monthly and the 3 monthly charts, we're showing very good bullish signs to move much higher towards the end of this year. So in conclusion, coming back to the 60-day cycle, please have some patience and wait for the resolution of the price action over here. Once we get above the long-legged doji and close above this level here at 30,000 with a daily candle, then we know with a high degree of probability that this 45-day cycle low is in. However, if we close below this long-legged doji here, down at 27,200, then we know that the actual 60-day cycle is moving into the cycle low towards these levels here, around 25,000. And of course, it can go lower than that, and the cycle can be elongated towards the 70-day mark. So we'll just have to wait for the actual developments of the candlestick patterns as well as the market price. We must be dictated by what the Bitcoin wants to do. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.